Hey everyone, and welcome back to the Deep Dive. Today we're going deep into ICICI Bank's 2023-24 annual report.
Oh, yeah. This is a good one.
It's massive,
Yeah.
packed with insights into their financials, their strategy, risk management, even their approach to things like sustainability and employee well-being.
It's like getting a backstage pass to how they operate, beyond just the number.
Exactly. So let's not waste any time. Let's start with what everyone wants to know, the financials. How do they actually do?
Well, their net interest income saw a huge jump, almost 20%, to hit a massive 743.06 billion.
Whoa, almost 20%. That's impressive. Where's that growth coming from?
Mostly from their loan portfolio, especially in the retail and rural segments. Those saw year-over-year growth of 19.8% and 17.2% respectively. Seems like they're strategically targeting a wider customer base.
Smart move. Spreading the risk. But hold on, the report also mentions that their interest expenses shot up by a hefty 45.6%. Sounds a little alarming, doesn't it?
Well, it's definitely something to keep an eye on. The report points to the global economic slowdown and rising interest rates as the main culprits. Banks are having to pay more to borrow money themselves, and that cost is at least partially getting passed on.
So it's not just an ICICI Bank thing, it's a broader trend.
Yeah.
Makes sense. But even with those higher expenses, their bottom line looks pretty healthy. What about their net income?
Their net income saw a big jump too, surging by 28.2% to reach 408.88 billion. That's a testament to strong core operating performance and also a reduction in provisions.
Provisions. That rings a bell from our outline about risk management. We'll definitely come back to that. Sure. But first, earnings per share, or EPS. That's what investors are always watching, right?
Absolutely. And ICICI Bank didn't disappoint. Their EPS jumped to 58.38, which is a significant increase, should make investors happy.
Okay, so financially they seem to be in a good spot, but a bank's success isn't just about profits. Let's talk asset quality, specifically their loan portfolio. What's the breakdown?
Well, as we said earlier, their loan portfolio saw strong growth, especially in the retail and rural markets. This suggests a strategic focus on those segments. When you look at the composition, it seems home loans, personal loans, and credit to rural businesses make up the bulk of it.
Interesting. So they're diversifying their lending. On the surface, that seems like a good way to manage risk. But what about non-performing loans, or NPLs? How are they handling those?
The report doesn't give a specific NPL ratio, but it does highlight their approach to provisioning and asset classification. And get this, the Reserve Bank of India, the RBI, found no divergence in their assessment.
So they got a thumbs up from the regulator. That's a good sign, right?
Yeah, it suggests their risk management practices are pretty solid. The RBI's affirmation means they're realistically assessing those MPAs and setting aside enough to cover potential losses.
Okay, so they're being proactive about managing those bad loans.
Yeah.
They also talk about a fair to customer, fair to bank principle. What's that all about?
Basically, it's about finding a balance. They want to support customers who are facing tough times, but also protect the bank's interests. It's customer-centric, but also pragmatic, which seems to be a bit of a theme for them.
I see. It's about building those long-term relationships they talk about. Now on to capital adequacy, another key factor for stability. What do their capital ratios look like?
They're looking strong, all comfortably above the regulatory requirements, which points to a strong financial position. Their Common Equity Tier 1 capital ratio, or CET1, stands at 15.60%. Then the Tier 1 capital ratio is also 15.60%, and the total capital ratio comes in at 16.33%.
They've got a nice cushion to absorb any potential shocks.
Mm-hmm.
But capital adequacy is just one piece of the puzzle. What about liquidity? Can they access the cash they need when they need it?
The report doesn't specifically mention a liquidity coverage ratio, but we can get some clues from their funding sources. A whopping 91.9% of their funding comes from deposits.
Wow, almost 92% from deposits. That's a pretty strong endorsement from their customer base.
Exactly. It shows people trust them. A strong deposit base like that gives them stable and relatively low-cost funding, so they're less reliant on those volatile wholesale funding markets.
Right, so they're not scrambling for cash, which is a good sign. Now let's shift gears to operational efficiency. Running a bank isn't cheap. Every penny counts.
You're telling me, while the report doesn't explicitly give us numbers for the cost-to-income ratio, return on assets, or ROA, or return on equity, ROE, these are definitely metrics we want to look at to gauge their efficiency and performance.
Okay, so walk us through what each of those means and why they're important.
Sure. So the cost-to-income ratio, or CIR, basically tells us how efficiently they're using their resources to generate income. A lower CIR means they're doing more with less, which is always a good thing.
So basically, how much are they spending to make a buck?
Exactly. Now, ROA measures how profitable they are relative to their total assets. A higher ROA generally means they're using their assets effectively to make those profits.
Yeah, yes.
And ROE. ROE focuses on how effectively they're using shareholders' equity to generate profit. Higher ROE is usually attractive to investors because it signals better returns on their investment.
Makes sense. So even though we don't have the specific numbers from the report, understanding what these ratios represent gives us a framework for assessing their overall efficiency.
Definitely. These metrics provide a helpful lens for understanding their financial health and their ability to generate sustainable returns.
Great. We've covered a lot of ground: financial performance, their loan portfolio, capital adequacy, liquidity. But we can't forget risk management.
You got it. Managing risk is critical for any bank. And this report spends a good amount of time detailing ICICI Bank's multi-layered approach. They seem to have a good handle on things.
Their focus on cybersecurity and climate risk definitely caught my eye. Let's start with cybersecurity. With so many transactions happening, online banks are prime targets.
Right. Absolutely. And ICICI Bank seems to be taking it very seriously. They've got a 247 security operations center data loss prevention systems, and they've aligned their cybersecurity framework with industry best practices and regulations.
So they're not just checking boxes. They're actively working to protect their systems and their customers' data.
Exactly. Now, climate risk is another area where they're being proactive.
They even have a dedicated climate risk management framework, or CRMF, which sounds pretty impressive.
It is. This framework helps them assess how climate change could potentially impact their operations and their lending portfolio.
So they're looking at both sides of the coin: how climate change could directly affect them and how it could impact the businesses they lend to.
Exactly. They're also using climate scenario analysis to try and quantify these risks and incorporate them into their financial planning. This kind of forward-thinking approach is becoming increasingly important as investors and regulators are demanding more transparency and action on climate-related risks.
Okay, so ICICI Bank is clearly on top of these emerging risks. But what about their plans for the future? What's next for them?
Well, the report doesn't give specific financial guidance, but it does highlight three key strategic areas: digital transformation, customer centricity, and sustainability. Let's start with their digital transformation. They're continuing to invest heavily in technology and digital platforms.
Yeah, I mean, who isn't these days?
Yeah.
But what does that actually look like for them?
Think over 600 APIs and over 160 million financial and non-financial transactions happening every day. Those are some serious numbers.
Yeah.
They're not just dipping their toes into the digital world, they're diving headfirst.
Wow, that's impressive. They're really embracing the digital wave. And it makes sense if they want to stay competitive in today's rapidly changing landscape. What about their focus on customer centricity? They keep mentioning their one bank, one team approach.
It's more than just a slogan. It's about breaking down those internal silos and making sure everyone is focused on delivering exceptional value to the customer.
Right, happy customers, happy bank. What about that third strategic area?
Sustainability. ICICI Bank is actively integrating environmental, social, and governance, or ESG principles into their operations and lending practices.
So they're not just thinking about profits, they're thinking about their impact on the world.
I like that. It makes good business sense, too. Investors are increasingly looking for companies with strong ESG credentials. Plus, managing these risks effectively can protect a bank's reputation and help attract and retain top talent.
So they're aiming to be a force for good while also boosting their bottom line. Not bad, ICICI Bank, not bad at all.
And they're walking the walk. They've set a target of becoming carbon neutral by 2032 and are focusing on sustainable financing.
They're putting their money where their mouth is. Impressive. Now, expanding into new markets, especially overseas, can be tricky. How are they approaching that?
You're right. There are cultural differences, regulatory hurdles, and they need to understand the local market dynamics. They can't just use a one-size-fits-all approach.
So no copy-pasting. They need to tailor their products and services to meet each market's specific needs. How are they navigating that?
Their international subsidiaries play a key role. They have the local expertise and can help navigate the complexities of doing business in different countries. It's like having boots on the ground.
So they're building a global network while also leveraging local knowledge. That's smart. Speaking of people, the report also highlights their approach to employee well-being.
Yeah, and they're taking some really progressive steps. Their program for employees with children with special needs is particularly noteworthy. It's not something you see every day, and it shows a real commitment to diversity and inclusion.
I was really impressed by that. It demonstrates a genuine care for their employees.
Yeah.
They're also focused on providing opportunities for growth and development, right?
Absolutely. They have a robust training program and are even partnering with academic institutions to cultivate the next generation of banking professionals. It's a win-win, ensuring they have a pipeline of skilled talent while also contributing to the industry's future.
Okay, so we've talked about their financials, risk management, future strategies, and even their approach to sustainability and employee well-being. But before we wrap up, we have to touch on corporate governance, the foundation of any successful organization.
You're absolutely right. The report discusses ICICI Bank's board structure, its various committees, and their commitment to ethical conduct. And of course, they're subject to oversight from regulators like the RBI, which helps ensure transparency and accountability.
It's not just about following the rules, it's about doing the right thing. And that's something ICICI Bank seems to be taking seriously.
Absolutely. Good corporate governance builds trust with investors, customers, and the public. It's essential for long-term success.
So to recap, we've explored ICICI Bank's financial performance, their impressive risk management strategies, ambitious plans for the future, and their commitment to sustainability and employee well-being.
And we've only just scratched the surface. There's a wealth of information in this report. I encourage our listeners to check out the full version on ICICI Bank's website.
Definitely. But before you do, I have one final thought for you to ponder.
Yeah, it really makes you think about those ethical questions around AI, especially when it comes to lending. Can we make sure these algorithms are fair? You know, not accidentally reinforcing existing biases.
That's a big one. And it goes way beyond just ICICI Bank. It's something the whole financial industry needs to figure out as AI becomes more common.
Definitely. Transparency and explainability are going to be key. Customers need to understand how those decisions are being made, and banks need to be able to show that their systems are fair and unbiased.
It's almost like a whole new layer of risk management, isn't it? Managing the risks that come with using AI itself.
Exactly. It'll be interesting to see how ICICI Bank, with their focus on being customer-centric, how they tackle this. But stepping back a bit, what are some of the bigger challenges and opportunities they're facing, along with the rest of the banking industry? I mean,
Well, the report mentioned that global economic slowdown, that's a headwind for everyone, could lead to higher credit risk if borrowers start struggling to repay their loans.
right, those global ripples can definitely be felt in everyone's wallets. And on top of that, you've got the constantly changing regulatory landscape. Banks are under more scrutiny than ever, especially when it comes to things like data privacy, cybersecurity, anti-money laundering.
It's like a constant game of catch-up as the rules change, which can be expensive and complicated, especially for a bank operating in multiple countries like ICICI.
For sure. But it's not all doom and gloom. There are some exciting opportunities out there too. One of the biggest is the rise of fintech. It's really shaking things up and forcing those traditional banks to innovate.
Yeah, it's a wake-up call for the industry to step up their game.
Exactly. Fintech companies are often much nimbler, more agile. They can offer those user-friendly, innovative products and services that customers want.
That's where ICICI Bank's digital transformation strategy comes in, right?
You got it. By investing in those new technologies and developing their own platforms, they can compete more effectively with these new players.
And it sounds like they're not just playing defense. They're using tech to actually enhance those customer relationships.
Exactly. That customer centricity focus is all about using data and analytics to really understand their customers' needs and then deliver those personalized experiences.
So they're turning data into insights and insights into action. That's the power of technology, right?
It is. And speaking of opportunities, there's also that growing focus on sustainable finance.
Right, their commitment to ESG, those principles we talked about earlier.
Exactly. Investors want to align their portfolios with their values, and they're looking for companies with strong ESG credentials. Banks have a big role to play in directing capital towards sustainable investments.
And ICICI Bank is already making moves in that area with those sustainable financing initiatives and their goal of becoming carbon neutral by 2032.
They're definitely positioning themselves as a leader in this space, which can attract investors and customers who care about sustainability.
Smart move. Now they're pushing to those retail and rural segments. That's all about expanding into new markets, right? But that can be tough too.
Absolutely. It's not as easy as just opening up shop somewhere new. They need to understand those cultural differences, the regulatory environment, the local market dynamics.
No cookie cutter approach. They have to tailor their products and services to fit each market.
Exactly. And it seems like their international subsidiaries are key here. They provide that on-the-ground expertise and help them navigate those complexities.
So they're building a global network, but with local knowledge. Speaking of people, let's talk about their approach to employee well-being. The report highlighted some pretty progressive things.
Oh, yeah. That program for employees with children with special needs really stood out to me. It's not something you see every day. It says a lot about their commitment to inclusivity.
It was really impressive. And they're also big on providing opportunities for growth and development, right?
Absolutely. They've got that robust training program we talked about. Plus, they're partnering with universities to help develop the next generation of banking professionals. It's a win-win. They're ensuring a pipeline of talent and also giving back to the industry.
It creates a nice positive cycle.
Right.
Now, we've covered a ton, but before we wrap up, we can't forget about corporate governance. It's the foundation of any successful organization.
So true. It's crucial. The report highlights ICICI Bank's board structure, its committees, and their commitment to ethical conduct. They're also under the watchful eye of regulators like the RBI, which keeps things transparent and accountable.
It's not just about following the rules, it's about doing the right thing. And ICICI Bank seems to be taking that to heart.
Definitely. Good corporate governance builds trust with investors, customers, the public. It's essential for long-term success.
All right, so we've explored their financials, risk management strategies for the future, and their commitment to sustainability employees, good governance. We've seen how ICICI Bank is navigating a complex and ever-changing world, embracing innovation and building a sustainable future.
And we've barely scratched the surface. There's so much more in this report. I really recommend checking out the full version on their website.
Absolutely. It's worth a read. But before you go, I have one final thought for you to ponder. So as AI and machine learning get more and more integrated into financial services, how will ICICI Bank use these technologies? And not just for efficiency, but to actually boost their fair-to-customer, fair-to-bank commitment.
Ooh, that's a good one. It really gets you thinking about the possibilities and the potential downsides, too.
Right, like, will these algorithms always be fair? Or could they unintentionally end up perpetuating existing biases? And how can they make sure things are transparent so customers understand how these decisions are being made?
It's a vital question, and it's not just for ICICI Bank either. It's something the whole financial industry needs to grapple with as AI becomes more and more widespread.
It's like a whole new area of risk management, isn't it? You're managing the risks that come with using AI itself.
Exactly. Transparency and explainability are going to be key. Customers deserve to know how those decisions are made, and banks need to be able to show that their AI systems are fair and unbiased. It'll be fascinating to see how ICICI Bank, with their focus on the customer, how they approach all this.
Well, we've covered so much today, from their financials and risk management to their strategies for the future and their commitment to sustainability employees, good governance. It's clear ICICI Bank is a major player in the industry.
We've only just scratched the surface. This annual report is packed with insights. I highly recommend checking out the full version on their website.
It's definitely worth a read. But as we wrap up that question about AI and fairness, that's a great one for our listeners to think about. It's a discussion we'll definitely be continuing in future deep dives.
For sure. Until then, keep exploring, keep learning, and keep diving deep.
Thanks for joining us on the Deep Dive.